In this video we are going to summary the answers that one student asked to us. The first question refers to market structure. An uptrend is a pattern of successively higher highs and higher lows. Both are important. Most people readily accept a definition of an uptrend that requires higher highs. This is intuitive, but it is easy to overlook the importance of accompanying higher lows. If a market is only making higher highs, but is not also clearly holding higher lows, the buyers are not solidly in control of that market. Conversely, a downtrend is a series of both lower lows and lower highs. This is perhaps the most elementary definition of trend possible on any time frame. Under this system, there are three possible trend states: up, down, or uncertain. Many people incorrectly assume that a market is either in an uptrend or in a downtrend, but the third possibility is important. There are several reasons that a trend could be identified as uncertain. For example, perhaps the pattern in the market actually is unclear and more or less random. We can usually force any structure into some pattern, but such a Procrustean approach is rarely constructive. We are going to apply these principles to a real market chart. The major criteria to draw the structure is to have a clear trend. As we can see, we have here a clear downtrend. To visualize better the swing and correction, we suggest to use a line in order to draw over the price. Then you can hide the candle chart and the structure will be much cleaner. Next step is highlighting the lower low and lower high. Keep this in mind: the new higher low is created or validated when price breaks the recent lower low and so on. It is very important when the trend changes. The trend changes or has high probability of reversing when price breaks the last higher low. This is also called the break of structure. They are the same thing. This is the market structure, nothing more and nothing less. In our chart, price broke the structure, the recent higher low. Price then pulled back in order to create the first higher low. This is the moment when we define our entry. Recommended broker is Henko Trade. Henko Trade is offering a diverse range of trading instruments and services. The amount that is deposited by the client will be matched and credited into client's trading account. Sign up with the link in the description and deposit to receive your guaranteed 100% bonus. We are going to focus on the recent swing between last lower low and high. Daily session volume profile is very useful. We can use the fresh point of control level as entry level. In this case, the point of control is not fresh and have less strength. Another element that we notice here, it is the support and resistance level. When we highlight the value area of the session volume profile, we noticed that the upper edge of this zone correlates with our support and resistance level. The last but not the least is the demand zone, or some call it order block. Personally, I prefer to use this zone to define the entry. I suggest to use it in correlation with other elements as fresh point of control or important Fibonacci levels, and a B equals CD pattern. There are different levels that you can put the stop loss depending of how aggressive your trading style is. A conservative entry is recommended below the lower low. Another conservative one is recommended below the second from last lower low. And the riskier one, but with much more reward, is below the demand zone. Price broke the high and created new higher high, then pulled back exactly at the demand zone and bounced, forming in this way a potential higher low. Now we are going to explain how to profit from market structure during a trend. In a downtrend, as this example right now, you should wait for the break of last lower low and enter a sell trade at pullback. To define the entry zone, we use supply, session volume profile and Fibonacci, as we did when trend reversed. For the first break of low, price pullback exactly at supply zone. After the second break of lower low, price pullback at the fresh point of control. After the next break, Price pullback again at the demand zone. In the last break, the supply zone failed to hold the price, and eventually we have the break of last higher low and confirmation for trend reversal. As we can see, this supply zone become a demand zone. Let's talk about Fibonacci retracement. In an uptrend you should draw them from swing low to swing high, and in downtrend from swing high to swing low. In the first correction, price retrace between 0.707 and 0.786 level. We apply the Fibonacci to the next impulse. Price pullback at 0.618 to 0.707 level. We can apply the Fibonacci to different highs and lows. For example, we can draw them from the first high to the last lower low. We can include 1, 2, or more higher lows inside the Fibonacci. Personally, prefer to draw them on single impulse.
If you are looking for a prop firm, the best choice is Funded Next. What makes it different? Earn 15% profit from the beginning. Keep up to 90% of your profit. Reach $4 million account balance. Get a dedicated account manager.
Now let's talk about -0.27 extension level. This level can often signify the end of the impulse, can serve as a support or resistance. In this example we saw more than one time the power of this level. As you have seen, we use the session volume a lot in order to identify the fresh point of control. They are a powerful level and can serve as resistance or support. We have used them to define our entry level in many cases. We are going to highlight only the point of control in order to visualize better the power of this level and how price react towards this level. Look how beautifully the price respect this level. Each of point of control become one or more times a support and resistance. Fixed range volume profile. Since you are part of premium channel, you have seen this volume on the right of the chart. This volume represents the sum of all session volume that are currently on the chart frame. It will change the shape if we add or remove candlesticks from chart frame. To strengthen this, we are going to see that high volume nodes of the fixed volume correspond to point of control of session volume. In order to have a cleaner chart, sometimes we use only fixed range to mark the sensitive levels. In this video we have summarized different trading tool that we systematically use on the daily basis.